past journal entries for forfeiture and reissue of forfeited shares in the following cases. Okay, and we've got part one and part two, which is in the next video. Anyway, for now, part one, we're going to be doing journal entries in the books, okay, books of Macil, Macil Limited. Okay, and what's happening is we've got 3,000 shares of 100 each issued at a premium of 20%. Okay, so face value will be 100 plus 20% of 100, which is 20. Okay, that much is going to be the premium. Number of shares cancelled, number of shares forfeited or cancelled is 3,000. Okay, for the non-payment of allotment money of 30 per share and first call of 40 per share, including premium of 10. Right, and what we have to do is sort of break up the levels. So let's say we've got allotment, they're saying 30 per share and they've not said how much of premium. Then they've said first call of 40 per share, including a premium of 10. So I can write that instead as 30 plus 10. Then they're telling us that the second and final call of 30, including a premium of 10, was yet to be called. So I can write that as 20 plus 10. Okay, and I know that the total anyhow has to be 100 plus 20. And notice how we've got 10 and 10 over here, which sorts out the premiums. Okay, and we are at the level of allotment. Now, we need to still go backwards and find out how much was application. And it becomes easy now that we have this table in place because I can take 100 and subtract the total that I have over here, which is 80. So I'm guessing this is 20. Okay. Now if you add 20 plus 30 plus 30 plus 20, you'll get 100. 10 plus 10 will give you 20. All right. Now, moving forward, we look at what's happening to the shares once they are forfeited. Out of these 2000, out of these 2000, okay, are reissued. Okay, 2000 are reissued at 80 per share, paid up for 90, at 80 for 90. And how we deal with that, we will see going forward. All right, number of shares are forfeited after non-payment of allotment. Okay, so at the time of allotment, it is not paid. We can now pass our entries. Whenever we are canceling shares, it's going to be capital, share capital account debit. If it is for premium, then securities premium will be debited if the securities premium hasn't been paid. And it is very clear that it has not been paid. All right. So securities premium, securities premium account debit to share forfeiture for the money that we are not refunding back on cancellation. Okay. And two calls in arrears for the amount that was previously debited to the call scenarios account. Okay, so the number of shares that we are forfeiting is 3,000. Okay, that we have to multiply into what is called the called up value. Now remember, they are telling us that, okay, for non-payment of allotment money and first call, the second and final call was not yet called. That means till now, what has been called is only till the first call. Okay, so 30, 20 plus 30 plus 30. All right, you add these up, we end up with a called up value of 80. Okay, so if we have if we have a called up value, if we have a called up value of 80 and the number of shares number of shares is 3, okay, is 3,000. We can multiply 80 into 3,000. We'll get 2,40,000. 2,40,000 is what we're going to debit as the share capital. As far as the securities premium is concerned, there was no premium at the time of application or allotment, but there was a premium at the time of first call. So first call's premium is 10. We are talking about 3,000 shares. 3,000 into 10 gives us 30,000. We have share forfeiture account. Okay, and share forfeiture account is for the amount that has been paid till now. Now the person did not pay allotment. That means all that he paid was application. Okay, so 20 into 3,000, you're going to get a forfeiture of 60,000. And by that logic, I mean, we can subtract. We have 2,40,000 plus 30, 2,70,000. Subtract, you're going to end up with 2,10,000. Okay, but is there another way to do this calculation? There is. We have to think about the money that was not received. And the money that was not received is going to be this 30, okay, and this 40. So 40 plus 30, 70, 70 into 3,000. Okay, I'm writing it here. 70 into 3,000 will give you 2,10,000. So either way, you'll get the answer. Right. So being 3,000 shares forfeited, being 3,000 shares forfeited on non-payment or default of first call. All right. Now, they have also told us that we have reissued these shares. 2,000 of those shares have been reissued at 80 for 90. That means the paid up value is considered to be 80, but the shareholders being charged 90. That means 10 rupees extra. It's being issued at a premium. Bank account debit, debit what comes in, to share account, credit what goes out, and to securities premium, credit all incomes and gains. To securities premium, right? And it will be being 2,000 shares forfeited, reissued. Okay, and reissued at 90 per share and paid up for rupees 80. Okay, and this becomes important because the 10, the difference 90 minus 80, which is 10 into 2,000 is going to be securities premium. So 20,000 there. The amount received is going to be 2,000 into 90, which is 1,80,000. The difference is going to end up being 1,60,000, which we can also calculate by understanding what is the paid up capital. The paid up is how much goes to the share capital. 80 into 2,000, 1,60,000. All right, with that, we are done with the first two entries. Now, when we reissue forfeited shares, okay, we have to also transfer the balance in the share forfeiture, to the capital reserve. And the rule is, if if the amount of shares or the number of shares forfeited forfeited is equal to the number of shares issued, Okay. The difference, or better than that, the net balance of share for feature is transferred to capital reserve. But in our case, not all the shares are reissued, only some of them. Okay. And that's why we have to use a formula to calculate. And that formula for capital reserve is equal to amount forfeited upon number of shares forfeited minus discount. In our case, there's no discount, it's a premium. So the discount will be zero. Okay, so minus discount, if any, into number of shares, number of shares reissued. Right. Now, going back up, okay, we have the number of shares reissued is 2000. Okay. And the number of shares forfeited is 3000. The share forfeiture count is 60,000. All right. So the amount forfeited is 60,000. The number of shares forfeited is 3,000. The discount is zero. The number of shares reissued is 2,000. Simplifying 3,000, 60,000 upon 3,000 should give us 20 into 2,000, which gives us 40. Now we have 40,000 as our capital reserve. That much we debit the share forfeiture. Okay, share forfeiture account, share forfeiture account debit to capital capital reserve account. Okay, and we have 40,000 over here and 40,000 over here. All right, and it is going to be being share forfeiture account transferred. Okay, not all of it, only for the shares reissued. Transferred to capital reserve. And with that, we are done with this. So, any doubts, feel free to comment. And as always, please like, share, and subscribe. Thank you.